Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou, and I am here with my co-host, Kevin Casey. How are you today, Kevin?
Fresh and ready to go. What day is it anyway? It's like,
I
how
have
did it
no
get to be
idea.
Tuesday?
No
That was
idea.
our last holiday until Memorial Day.
That
Why
is a
do they
long
bunch
haul.
all the holidays in all in the same period of time and then next thing, nothing?
It's a long haul, baby. Okay, so you may be noticing, not you, I'm hoping you've already noticed. Listeners may have noticed that we are not joined by anyone today. It is just the two of us. So that begs the question, do I still need to behave?
No, you don't. There's no guest.
Okay, we should have done a poll or something to see whether, like, can I let it loose or do I still have to sort of, you know, keep it together and mildly professional? All right, so what that means though is we are not going to need to bounce back and forth between a guest and us. And so we can dive right in with the idea that we are with Chrisman Media Group and that there are many other offerings that you could check out in their offerings, including one today on the regulatory environment. So that would be interesting. Also, remember, we have a YouTube channel. You can put that on and turn it on 1.5 speed and get this over with faster if you prefer. And today, last time I looked, the 10-year was at 4.53, so better. And it was interesting because I had this loan, I have a loan in docs, and I locked it 21 days ago. And today I checked the pricing and it is almost the same. So in the last 21 days, despite all the ups and downs, it's basically been level. Just to let you know what else is happening this week, housing starts and permits are tomorrow, along with the Fed meeting minutes. That's always interesting. Thursday we have jobless claims, and Friday we have existing home sales. Oh, also tomorrow we have a 20-year auction and mortgage applications. So it'll be interesting to see what happens with these jobless claims going forward.
That's the one
And
I'm most interested
government
in.
firings, etc. So buckle up, kiddies. It's going to be a wild ride as usual. Like, when isn't it, right?
Well, just the job reports always kind of throws things into chaos.
Don't even get me started on that.
And
I'm
then,
not.
and then it's going to be really interesting. The jobs report is when do all these federal workers that are being let go start showing up the jobs numbers?
Yeah. Well,
Because
especially
that's
because
thousands and thousands of people.
their buyouts are sort of on hold right now. And we have one comment from our friend Guy. He says, "No, you are never behaved." I actually do keep it together for the most part on Tuesdays between 11 and 12 a.m. to noon Pacific time. That's
But
about all I can
otherwise
say.
not.
I really try. So there you go. But next week, we've had a lot of questions about NMLS and what's going to happen with them. We're going to have some folks on next week to talk about that. And then the week after that, we have Diego Sanchez, who is the president of Housing Wire magazine, which will be interesting. An industry, what do we call it? A rag, industry rag.
Yeah, I don't think Housing Wire is quite a rag.
You think you'd appreciate it if I characterize
There's some others I'd consider rags, but the
Yeah,
Housing Wire,
you
no.
know what? That is a very good point there. Yeah, exactly. You're right. Is a rag all magazines or it's just certain magazines? I don't know. All right. So let's talk first, shall we, about the CFPB and the new nominee. So we've had 4 directors in less than 30 days. You realize that? Isn't that crazy?
Three different people.
So, well, okay, we're counting this guy. So we went from, let's see, hang on. We went
Chopra
Chopra to
to Bissett,
to,
Dissent.
right, and then to Russ Voigt, or however you say his last name, who's now the acting director, and then we've got our nominee Jonathan McKernan. I have to practice saying that name
That's
because
four.
what did I just say? I said 4, you said 3. I was correcting you with all.
I didn't know about
Oh
the
God.
well, I
Okay.
skipped him. He was
All
only there
right.
for such a short time. I didn't even know he existed.
What?
I didn't even know existed because he was there like while I was on
No, he's
for a
still
weekend.
there. He's also, just for fun, the director of the Office of Management and Budget. So he's the guy who came in and went, "All right, kids, that's it." No, I guess Bessett.
Okay, then what happened to McKernan?
Well, no, he's the nominee. Oh my God, keep up. Geez Louise. All right, so he is, let's talk about this for a minute. So Jonathan McKernan, when you see the R in the N, it almost looks like an M, so you have to think about it really hard to make sure you don't say it incorrectly.
Actually,
Jonathan McKernan. Okay, so this article is, by the way, that I got this information from was written by John Coleman, who is with Orrick, which is an international law firm based out of San Francisco. For fairly credible source. I was just trying to figure out, like, is there going to be a slant to their comments is the reason I was interested in, who the heck wrote this. So what they said is he graduated from the University of Tennessee, Duke University Law School. He was in private practice. He's been on Senator Bob Corker's staff as the senior financial policy aide. And then he held other policy advisor roles at the Treasury Department and FHFA before coming counsel to the ranking member, Pat Toomey, on the Senate Banking Committee. So he's been around the block a little bit. So President Biden nominated him, actually, to serve as the Republican member of the FDIC's board in 2022, because I guess by law, I didn't know this, you are required to have a bipartisan board. So he was nominated to be the Republican representative. So he was, so there doesn't seem to be a lot of controversy around this guy. He is the nominee. So here's a couple things, because we keep wondering what is going to happen to the CFPB, right? And so my guess, here's my semi-educated guess. This guy resigned his position with the FDIC on February 10th. I would imagine that if they're going to just go in there and shut down the entire agency, he probably wouldn't just, resign his position. I'm guessing. So I'm hoping that they will take a fairly moderate stance on this. Again, hearkening back to Kathy Kraninger, who was the director under President Trump. I thought she did a decent job. So he opposes undue regulatory burden and he supports responsible risk taking. So, I mean, we can all get behind that, right? He favors regulatory transparency. And this is something all of us have been hoping for. We've been inching towards ever so slowly over the last, however long it's been. Seems like 1,200 years, right, Kevin? And he's been a little critical of some of the rulemaking. So he doesn't want to have regulation keep people out of the business. And but he also, I thought this was interesting, and this doesn't have anything to do with mortgages, but while he was with the FDIC, he led a push to enhance the FDIC's oversight of large asset managers who hold sizable investments in banks to ensure they're not exerting undue influence over the institution. So to me, that seems like a fairly moderate, like, okay, we're not going to dump regulation entirely. We want to make sure that the good guys are doing their thing and that the bad guys are, we're watching out for that. So we'll see. We'll see. So obviously it's interesting because they, they're really they're just they're not working. The CFPB is not working right now. And so he's got to figure out what to do with that. Where do they start? The acting director, he decided to not withdraw funds from the Federal Reserve that was coming up. So he's got a lot of things to do, but hopefully he'll be a good moderate influence in there. So what do you think?
Well, I've heard all sorts of things. I mean, it's kind of crazy what's going on over there. And one of the things I've heard is well, they're just going to grab all the funds that the CFPB has, because remember, CFPB is self-funded. They don't get funding from Congress. And so therefore Congress, when it was intentionally designed, so between, when you get a Republican or a Democrat, you don't get the swings. Unfortunately, they somehow found a way to really swing this time.
We always get the swings. What are you talking about?
Well, it's designed to keep the swings to a minimum.
Okay, the swings are supposed to be at a minimum. I feel like the swings are extraordinary. You don't think so?
Yeah.
Okay.
They're meant to be we didn't get that huge a swing between who was the first one? Calabria? No, who was the first guy? Corduroy, and then Mulvaney.
I would have fired him.
Yeah, well, no, between Corduroy, there wasn't when we went from the first time Trump was in office, they didn't go crazy with the CFPB. We actually had more enforcement
Not at all. No.
under the Trump's person than we did under the previous predecessor. Correct?
So
So there wasn't a huge swing, and they actually intentionally had done that because the idea was they didn't want another swing when Trump was no longer in power. Somehow that it kind of was evened out. We didn't see a lot of craziness. I mean, the CFPB on the mortgage side got to be a lot better, I think.
gotten better. We have improvements that need to be made. And actually, so we got a little heat from people who thought that we were too easy on our CFPB show a few weeks ago, and we will explain why later. There are reasons that we did.
Oh, there were a lot of
It
reasons.
just Kevin, we just can't right now. So just
Uh-huh.
stand by on that
Yeah.
because we're gonna circle back to that sometime soon and we'll let you know. But in the meantime, we do have the Doge. Is that how you say it? Doge? Doge? It looks like loge, you know, the loge at the opera house where you sit in the loge. So anyway, DOGE. Just wanted to talk for a minute about mortgage that with the
I like
mortgage
to call it doggy, but
doggy. Oh, geez. Okay, so just a little reminder, the legislation and regulations have not changed. Those have not gone away.
yeah.
By the way, just remember,
Wait. So what you're saying is I cannot start doing loans to people who don't qualify just because I feel like and there's no one regulating me.
okay,
Just like when the CFPB is not, or not, or the CHP is not on the freeway, I can go whatever speed I want, correct?
kinda.
Yeah, it's the same thing.
Okay, so I always like to remind ourselves that California, which not all of us are, but a lot of people are licensed here, even though they're in other states as well. And we do have people across the country. So maybe there are some states that are more loosey-goosey, shall we say. But California does somewhere between 26 and 29% of all the loans in the country. And we have very, very robust, shall we say, regulatory agencies in this state.
In other
And
words, we're a definite deep blue state.
and and there is a 5-year look back on these rules. So let's say, as often happens, there is another switch in 4 years.
Mhm.
And now we've got the other guys that come in. Guys, I'm sure, because why would it ever be
And
females?
they can look back and pull up your records on your phone and see what you were speeding on Highway 80.
Which, by the way, in the land of cars, I am so adamantly against. I mean, God, I mean, any regulation that wants to put something on my car to see how fast I was going anytime,
Mhm.
I'm
Yeah, the new ones give you a
yeah.
report. It's really cool. The new cars, they report how, if you were speeding, how many hard brakes you did, how many sharp turns you did.
That's a nightmare.
Yeah, no,
That's
it's great.
overreach. That's
No, but
ridiculous.
see what you have to do is each day when you get back and you look at your report, you try to beat the previous day's report.
Oh my God, I don't want any record of my speeds, okay? That's it. All right, so back to the CFPB. So again, we have a nominee. It'll probably be a fairly easy lift as far as getting him not confirmed, and then we'll see what happens next. And then we'll see what's left of the CFPB after the dust is settled and all the people who are going to leave have left, and then see who they're going to bring in. You know, it'll be a while before that all sorts itself out. But in the meantime, kids, keep your noses clean because there are still rules and regulations. And just by the way, just be a decent freaking human. That'd be great. And do the right thing by your borrowers. And that should keep you fairly safe.
Oh, wait. So you're also saying we can't charge whatever we want?
So sometimes Kevin goes off in a rabbit hole and says things that make me cringe that they would even come out of his mouth. Like he was suggesting something about something on a load. And he was just kidding, but still it makes my, it makes my skin
My
crawl
job here,
a
keep you
little bit.
engaged.
Okay. So there's that. So retail sales, by the way,
Wait, before you go on to that, I just wanted to say I listened to a really great article on Housing Wire on the CPB. Matt Van Fossen was interviewed. He's over at Absolute Home Loan Mortgage, and his takeaway, it was like an hour listen, but
wait, hang on. I need to pause for a minute. You listen to something for an
I
hour?
know, I actually listened to something. Um, But the takeaways were that loan officers need to get much more involved in their trade associations,
Yeah,
because we now need to really push Congress, because like we have failed for the last 6, 7, 8 years now to get trigger leads eliminated. I mean, we came so close,
okay, but
so
think
close.
about this. Just think about this for a second, Kevin. What does our industry do more than anything? Pound each other on the chest and go, well, I guess we're not pounding each other on the chest, pound each other on the back going, I'm better than you are. No, I'm better than you are. No, I'm better. You're worse. You suck. I'm better. All that conversation has completely been a great marketing tool, but a terrible, terrible thing for the borrowers because it distracts us from what matters, which is, are we taking care of our borrowers? Are we taking care of the consumer? Are we attending to the things that impact not just our business, but their lives? And when you get caught up in the who's better than whom, and the fact that we had how many trigger lead bills last year, and like you
You
can't
had
all get
3
together
different
and file
ones.
one.
Yeah,
You're
3
gonna
different.
do one, it's gonna have a Democratic backer, you're gonna do another one, it has a Republican backer, and then you've got the other association who chimes in the middle of it, taking credit for the whole freaking thing, even though they had nothing to do with any of it. And I'm like, oh my God, what a bunch of, see, this is where I'd like to insert a very, very particular word, but I will refrain and continue to behave myself. Okay, so
Anyway, let me go back to what Matt was saying, was how important it is that
please,
we
it's an hour
actually
long, so
get involved in our trade associations, either MBA, NAM. If you want to do AIM, you could do there, and go to DC. Those of you who have never gone to DC, it's the most empowering thing you have ever done. You actually have a voice, and it is, you get blown away by the fact, like, oh my God, they actually listen to me. And sometimes you actually change laws. And it's kind of one of the coolest things ever. I mean, I've had it done twice where I've actually affected a law that was going to be in place, and it stopped because of something I said to somebody. So it's kind of something we all need to be reaching out for. The other thing too is, in this time and market, we really need to be talking to each other and saying, hey, what are you doing? What am I doing? How am I doing it? How are you getting by? And it's really important. That's where we meet each other. And it's one of the things that, like, people ask me all the time, like, where do you find all your private money lenders? From other loan officers or meeting private money lenders when I go to event conferences. That's literally, I find them.
so that requires leaving your house, which you were not crazy about for a while there, but you're getting better. So it is absolutely the truth. And again, like this has always been true. I mean, the reason that there are certain rules in California are literally because of what the trade association, California Association of Mortgage Brokers at that point did here. I
Yeah.
mean, some of the rules that they were going to put in place didn't happen because there was a big voice. So again, there needs to be loan officers, a lot of them, and you see this with people who are doing a ton of business and they have big teams, and all they care about is how much money they're making. That's it. How many numbers did I post? Am I number one? How much money did I make? And they lose sight of the fact that there are people out there in the trenches who are doing the work that really, really needs to be done, which is we do need to have a voice. The trigger lead thing is a big deal. Flood insurance is a big deal. There are so many
Regular insurance,
all insurance
condo associations.
deal. Yeah, the list is endless, honestly. And so again, be part of that and get out of your house, go to the events, go and meet people, and then do whether it's Sacramento or wherever your state is, your where your state laws are done, your state capitals, go to those events and do it at a state, national. You can do it at a local level too. So there you go. Okay, so we have some comments. So when are we going to have Elon on? Here's what I'd like to talk to Elon about. So, Doge, I'm going to call it Doge, Kevin, because again, Loge is Loge. It's got to be Doge.
No,
All right.
doggy.
Unless somebody, unless somebody else has some credible source for why I'm wrong, I'm going to go with Doge. So this is what I'd like to see happen. If we could have a to-do list for Doge, I would like them to go into what agency would I like them to go visit? That's right. Bureau of Labor Statistics. I guess it's not in
Yes, that would be really
yes. So what not so much efficiency as much as
accuracy.
accuracy. I want accuracy. That's what I'm looking for here. So I would like these reports that move the markets every freaking time they're released. I would like Doge to go in there and see if they could whip that into shape. What do you think?
Actually, I got a scenario with that. What is worse? A agency that puts out really bad numbers, or an agency that doesn't exist anymore?
Wait, what's worse? Bad
What
numbers.
would be worse? So,
Bad,
so Doge's been kind of getting rid of like the CFPB and other.
they're not.
So what if they went into the Bureau of
Don't-
Labor Statistics and just got rid of them because they can't seem to do their job?
Okay, I'm not completely opposed to this idea. So again, we have QCEW that comes out on the 19th. When is that? What is today? Oh, is that tomorrow?
Tomorrow, yeah.
Okay, QCEW, those are the,
You stop. You gotta tell me what that one is. I don't even know what that one
you
is.
just are asking me because you know that I literally have it written down normally. Anyway, I'll come back to that because I can't remember what it stands for in the moment. Anyway, they are the place there. It's 97% of the data is what they pull from. Jolts, I think, pulls from, I mean, it's like a tiny percentage, it's less than 30%, I think. So it is, so that is the number. It's the gold standard. And last year, if you recall, QCEW came out and we were off, not we, we weren't off. BLS was off by 818,000 jobs for the previous year. So I am very interested to see what those numbers look like for this year because I'm sure they didn't pull it together and do better. So with all that being
When does that report come out? That tomorrow?
tomorrow, Jesus,
Yeah, no, I gotta mark my calendar. What time?
I don't know. Good God. All right. So, oh God, and I meant to take a dive into this. Okay, we have another comment here. Are you saying we can't do non-owner as owner anymore? There is a law going into effect in 2026, which is not too far from now, that is going to make it, I believe, a felony to misrepresent occupancy. That's in California. But
Oh, in California.
okay, again, almost 30% of the loans that are done in the country are
Oh,
here.
now it's 30%.
I said, oh,
It started at 22, but
I
now it's
started
up to 30.
26.
Okay.
Okay, you cannot track a number to save your freaking life. 26 to 29%. I can never, the number moves a little bit. I can never remember exactly where it is in this moment. So that's why I gave you a range. Bottom line is a crap load of the loans that are done in this country are done here. And in the next 10 months or so, I don't know when in 2026, it will be a felony to do a loan that is owner occupied for someone who is not going to live there and vice versa.
And
Can you
how,
freaking believe that? God, I
first of all, where is this bill? Is this a bill currently?
let me just recap. Now try and pay attention. This is very difficult for you, I know. I'm going to check it out and I will have more details. And I don't have them now, but I believe that the word I read was felony. It kind of popped off.
Wait, I don't think the state can create a felony. I think a felony has to be at the federal. No, maybe I'm wrong.
You were totally wrong. Oh my God.
Yeah, that'd be way wrong.
Okay. So somebody made the comment, timeout, NAM has been on the trigger lead issue for years and years. NBA is the latecomer. I was not talking about NAM or NBA, just to be clear. So NAM has filed multiple over the years trigger lead bills, and then NBA did get on board and file one also. NAM did one, it had a Democratic backer. They had said they had tried to get the Republicans, they wouldn't join in. Meanwhile, NBA gets the Republicans. Finally, they had to merge the bills. And I mean, it's just, and then the other association, they chimed in and tried to take all the credit. It was incredible listening to them. And by the way, the other thing that annoyed the living out of me was when they came out on LinkedIn and they were saying it was definite that the bill was going to pass because they had attached to that spending bill that was a shoe-in, and then at the last minute there was all this, fluff that
Shenanigans. I think that's
what?
what they call them. Shenanigans.
I love that word. I hate to use it for this because this situation is so sucky. But anyway, there was so much crap going on, and it got killed. So, or it was killed. It got killed. It got killed. Anyway, all right. So, okay, and then we have another comment. Okay, can we get he said G-. dam. So I'm assuming it's something about a dam, maybe the Hoover Dam. They would like a conforming arm. So again, until the yield spreads are, back to normal. I mean, we're starting to see now, Kevin, you were pricing an arm the other day. You found one that was decent, right?
Yeah, I found one that was decent, but it's a credit union. They were very limited to what counties they live in.
Linden.
I had a really fun experience at AI trying to get it to give me.
Talk about that. This was important. I wanted to talk about this. And by the way, I just want to point out, so, we knew we didn't have a guest today. And so, I very diligently go through, I make this list, I do all this research, I've got this whole thing. And I'm assuming, I told Kevin, I'm like, we have to be ready. Like, we have to make sure we're able to carry this thing for an hour, for God's sake. He's like, yeah. And then we get on here right before, and I said, so you've got a list? He goes, yeah, I have one thing. I'm like,
What more do I need?
well, we'll see. We will see if I run out. Okay, so this whole thing with the AI was a big deal, and talk fast, but it was very important.
Fast or slow? If I have a whole hour to stretch out this out.
I'm gonna beat you. Go.
All right, so this credit union has some really great rates, arms and stuff like that, but they're only limited to certain counties in California. And so I decided I need to figure out, to market this, which counties I have that I can, go out to and reach to. And so I said, well, maybe I'll do is I'll go to AI and I'll say, hey, AI, give me a picture or an image of the state of California broken down by county lines, and then highlight the following counties. That was my instruction to AI. And what I got was a state of California with the most imaginary county lines I've ever seen. And then each one of them was labeled a variation of the 9 names I gave it. So like Sonoma was also Sonoma O, and like they just changed up the names, and it filled up the whole state of California with all the different imaginary county names.
Made up names.
Yeah, made up names. Yeah, made up names and made up borders. That was like classic.
I
Not
thought this
what I
was
wanted.
a
I tried it 3 times.
You tried
I changed up my instructions. Okay, it must be me. I didn't give it the proper instructions. So I reworded my instructions and said, here it is again. And 3 times, every time I did it, I got wilder and crazier images of the state of California, including one that went into Nevada. Apparently, United States isn't just taking over Canada. California apparently is going to take over Nevada, according to my AI. It was quite interesting. Yeah. Anyhow, what I finally did is I just got a map of California by county, and then I literally went in and drew around the counties so I could figure it out. That was the fastest way to solve the problem. So.
All right. I just thought this was a really good example of remembering that you cannot take things from AI verbatim. You must use that as a reference point and then take a dive in and check and recheck their work. And so it is, because it will make things up. And I also, because we had a conversation a few weeks ago about AI Googling, whatever, guidelines. And somebody said that, like, be careful. And, the Fannie guides are so poorly written that, it would be difficult anyway. And you can do your prompts so that it will only pull from certain reliable things that to be reliable resources that you know to be reliable. So with all that being said, learning how to not just ask the question, but to create the parameters around your question is really,
and tell it what you don't want.
And we've talked about that a number of times with Megan Anderson, who's come on and done these AI presentations with us. And so just keep that in mind. We have a question here asking whether that credit union you referenced work with brokers.
They're not a broker. Yeah,
I think they're they have very, very specific, very limited correspondent relationships. I think that's it. And it's not.
And because our corporate office is in their home county, that's how I think we got them.
Maybe. All right. So somebody obviously knew someone and invited them to Thanksgiving, and then the rest went from there. So
and a golf match is probably involved. That's how they come up with the pricing.
Probably, or somebody
with a score on this
or somebody had some good dirt on someone else. Could have been that. Okay. So we had retail sales numbers that came out last week for the month of January. No, I wrote 2024. It was 2025. So retail sales numbers. The headline was down 9/10 month over month, and the core was down 8/10 month over month. That is the lowest retail sales numbers we've had in 2 years. So also, interestingly, credit card debt is now at, you ready? You ready for this? Buckle up, kiddies.
Wait. I'm assuming it's all-time lows.
Wow. Good thing I'm here.
Yeah.
Okay, $1.2 trillion in credit card debt, which is 40,
Wait, that's just mine.
right, 41% higher than pre-COVID levels. So my point here is maybe there are some people in your world who might need cash out refinances. And if you do your homework and you figure out what the blended rate is between their 3% first and their 32% interest rate on their $60,000 in credit card debt, you might be surprised at who would benefit from this. And sometimes the math doesn't work, and that's fine. But make sure you're checking in with people and pointing out, because you can ask someone what their mortgage rate is, and they will tell you. And
Yeah, but they
they
won't tell you what their credit card rates
they
are.
may even be correct. But if you ask them what they're paying on their car loan, on their credit card, we only remember the interest rates that we're proud of, right? Like I know that my interest rate on my car is 1.95%. That's a freaking fantastic rate. But if my rate was 17.99%, I probably wouldn't remember it and share it with anyone, correct? So with all that being said, make them get their credit card statements out and look at those numbers. They are not paying attention to them, and they are so high, and you can go get some business that way, right?
Correct.
Okay, I wanted to talk for a moment about rate projections, because last week on February 12th, I think that was, what day was that? Wednesday. We had CPI come out, Consumer Price Index. This was for the month of January. And we were expecting that number to be much better. Remember that whole
Yeah,
conversation?
you know why we're expecting to be
We've
much better?
literally been waiting
The
for
huge-
months and months and months and months. Oh, because we were going to be replacing higher numbers from last year.
Not higher, a huge number.
Right. Okay. But what happened instead, kids? Well, not only did this year's number come in hotter than expected, but they changed the number from last year. That's right. They made
Oh,
it like,
I missed that part.
and by the way, just for fun, I believe, and I keep needing to double check this. I think BLS is in charge of at least one, if not more, of these inflation numbers that we go off of. So please hold while I.
Okay, and they waited until now to adjust it a year later.
It's just so messed up.
Because I knew that number was wrong the first time. It was like, all these numbers are nice, this, and also, woof. You know, that doesn't happen.
It was
Unless there's something major in the news.
Keep it clear. They were shit 3 months in a row. I mean, really high. Remember that?
Yeah.
So, okay, so we had CPA come in. It was hotter than expected. The markets tanked. Remember that on Wednesday? Went to HE double toothpicks. It was double what everyone expected. Headline was up 0.47%, up 0.47 month over month, which took us to 3% year over year. Core was up 0.44% month over month, which took us to 3.26 year over year. And everything went to hell. Okay, then on Thursday, do you remember Thursday? PPI came out. That's wholesale. So that was up 0.4% month over month headline, up 3.5% year over year. And that was up 0.3 month over month for core, 3.6% year over year. And so, it wasn't looking great, right? Here's something that was interesting, because I swear to God, I've never had this come up more time. And we've been doing this almost 5 years. I have never discussed eggs more on the show than in the last few months. So energy was up 1.7%. So my gas prices, which are ridiculous right now, are way up. Food was up 1.1%. Ready? Eggs were 44% of that number. They were up 40%.
Did you see the photograph?
No, hang on. They were up 40%, up 44% on the wholesale level. 60% of this month's increase in the food prices came from eggs. Okay, now go ahead.
I shared a photo with you over the weekend. I was up in Portland, Oregon, and stopped in at a sportsman's expo, which is something I never go to. My brother and
Yeah, you don't
wanted
need
to
to
go to
tell
this
why
thing.
you were at the Redneck Fest. Go right ahead. It's
Yeah,
fine.
yeah. It was quite entertaining, but there was one thing that they had this gun safe, and inside the gun safe were eggs.
Okay.
I thought that was
So
the most
I don't know if
hilarious.
you can,
Oh yeah, there you go. There's the gun safe with the eggs.
okay. Yeah. For the rock bottom price, by the way, of $9,317, which I pointed out to Kevin because it was Oregon, there's no sales tax, but shipping and handling would be ridiculous. So yeah,
Well,
that
yeah, I've had to find how to figure out how to get that thing onto the airplane.
okay.
And seeing I had to, run for my air flight and made it by just 2 minutes to spare,
Okay.
that would have been a tough run down the gangway.
Yeah. Okay, so anyway, so these inflation reports. So we've been waiting for January's numbers for months, right? We are
Yeah.
excited for February. Everyone's saying as soon as we get these numbers, the rates are going to come down, it's
Yeah.
better, yields, everything's going to be better, right? Sunshine and royal,
We failed to figure out that someone was
it
incompetent.
all goes to HE double toothpicks and is not at all what anyone expected. And then everyone's pissed off at the people who are doing the projections. And I have been saying for years, because when we started doing this, you were dying to make projections. And I slapped you around and said, absolutely not. That would be a fool's errand. And we are not going there because there's too much hair. So we have shared what we were hearing and what we thought seemed the most reasonable, but we are not, I repeat, not telling you whether to lock or not. So here's a question. How do you handle things in your business? Because I know for myself, I get a feeling and it's usually right. Every once in a while it's not, but usually it's right. But it's a feeling that's also coupled with the fact that I got my ear to the ground big time on what's happening out there. But also, do I have more to lose than to gain from do they have more to lose than to gain? And I have my borrowers make the decision, but I present them with what we know to be true and what is coming that could move something one way or the other. And so anyway, I'm curious what everyone else is doing out there and how you're managing this crazy market. Do you lock? Do you wait? Are you following the lock alerts? What are you doing with your
I
loan?
am totally contrary to you on this one.
Of course you are. Not surprised.
Okay. I never ask my clients when I should lock. I always lock when I feel I can close a loan in the time period of the lock because I have all the documents I need to make the deal happen. And that's when I lock the loan. Now, yes, I will look for a day or tomorrow. Oh, is there a jobs report coming out tomorrow? Or here's the better one. Is there a holiday coming up? You want to lock your loan on the Thursday before a holiday weekend, not on a Friday before a holiday weekend. So those are like my number of things I look out for. So, but generally I go by the rule is, can I lock and close within the time period? And is it a rate that will work for the borrower? Yes, lock it, move on.
Okay, so I will be
Because
honest.
I've seen way too many loan officers talk to their clients and try to go back and forth. Well, should we lock? Should we not lock? And in the meantime, the friggin' rates go up and then they're screwed.
Okay, so I would just like to say that typically if you're sharing this kind of information with your borrower, they're going to choose to lock. I will also tell you that I may or may not have locked this last one without talking to my client first because there were all of the tariff conversation was happening. It scared the shit out of me, to be honest. And I'm like, you know what? I'm just gonna lock it and see what happens. And
Generally, we know way better than they do.
and I told him afterwards, but I had also made the decision in my head that if I had to move my loan, if I was wrong, and if the rates moved a lot, then I would do that. What ended up happening, as I started with today, is in 21 days of all of this crazy, the rates really haven't moved. I mean, from there, they've gone up, they've gone down, they've gone up, I mean, it's been like a freaking yo-yo, but they have not really, they're almost exactly where they were 21 days ago, which is fascinating to me in light of all this crazy.
All the crazy, exactly.
So with that being
That
said,
was the same thing.
what that means is like locking and making sure they're protected.
I look at locking the same way I look at the gas prices.
Oh boy, here we go.
Do I, oh, wait a minute, gas might be lower tomorrow. Should I keep driving or should I just get the gas because I don't want to run out of gas? That's how I look at it. I get the gas when it is, and oh, geez, now I'm paying $7 a gallon. Oh, wait, this time I'm paying $3.99 a gallon, and it's nothing I can do about it.
Okay, So we have, Tony said, I find the day Audrey is locking and then I float. I find out when Audrey is floating and then I lock.
That's
So that is
brilliant move.
strategy for sure. Oh my God. Okay, so Michael Harris says freeing discretionary monthly to attack interest volume. He said, I'll save my clients money whether they like it or not. And then Guy is piping in with the best thing to do is get an equity line to pay off the bills. If you take someone out of a 30% rate and put them into 7, new first for 100 for $100,000 to pay off debt, you will go to loan agent hell. And so again, it is a math problem. Always you have to do the math, right? Does it actually?
The other option is if you put someone who has, let's say, $100,000 worth of credit card debt. Actually, what happens is they have $50,000 worth of credit card debt, but they want to remodel their kitchen. So then you say, well, let's do an equity line. We'll get you the money for your kitchen, the $50,000, and we'll pay off your credit card debt. We'll roll into one home equity line. And then when they finish that kitchen, then that's when you want to roll the 2 loans in together, because then that way you make more money. Because you do the equity loan money, you get the commission on that, and then you redo it. And
Okay.
And then
So-
it's a cash out, and then it's a cash out loan. You have to wait another 12 months, and then you can do a rate and term, and you get 3 commissions out of the whole deal.
Okay, I was wondering if someone should keep track today of how many times I roll my eyes or cringe. I'm not sure where we are on all this right now, but might be interesting to go back and check. Oh my God. Okay, so I just did a cash out, a couple of them for a client who had bought some rental properties, dumped $1 zillion into them, and then wanted to get his money back out and get, blah, 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 clean it all up. And so he's getting this pile of cash, and his wife has been campaigning for new bathrooms for years. And I literally, as we're funding, I looked at him, I said, listen to me. If you don't pay off your debt and you do bathrooms instead, I will beat the shit out of you. And he laughed and said he would behave. And so far, so good. But I think a good threat in the right place at the right time is not an unreasonable thing to do. All right. What else we got? Okay, so we had Fed speak last week. So in spite of those inflation reports that we got last week, Uncle Jerome said that they have made progress on inflation. They would like to see more. They know they're still restrictive and, pausing was a good thing. So there's that. Okay, there's this conversation about delistings. Have you seen this? It's all over the place. Like realtors taking properties off the market and then putting them back on. Okay.
I actually have a chart in front of me here on that one.
Okay. So just for the record, they do it all. This is normal at the end of the year. They often will do this. There was a large increase at the end of this year of the number of people doing that. What it does is it resets the days on market. So, and in 2024, the days on market was higher, and they attribute that to higher interest rates, right? So, whether or not that was actually the case, I don't know, but it was, I thought that was interesting. I mean, I wouldn't panic because again, our inventory levels are still in most places, again,
so low.
The Sand State, or wherever the, the 5 states that have increased inventory since pre-pandemic, most of the country does not. What were you gonna say?
I was going to say, I'm noticing the same thing in the rental market where people list and delist properties, especially real estate agents. Yeah, they want to keep the days on market down.
Everyone can see what they did and what they, I mean, I don't know.
But you have to dig. That's the trick.
Oh, okay. All right.
You have to dig for it. If you dig for it, you see it. And that's where I've been noticing. It's like, wait a minute, this property was listed just like 2 months ago for this price, and now they want this price. And oh wait, now they want that price. And then there's the opposite spectrum of the guys that put their listings up. And this is the amazing thing about property management, I'm kind of looking into. And they list a house and they leave it listed for like 100 days, and like they're getting like hundreds of inquiries, and like, why are they doing this? And they just must not be ignoring all their inquiries. So my only guess.
Well, I mean, okay, I was looking at some rental listings, and there is one in particular, and they list it. It's this bright, cheery space. And what they don't put in the listing is that the last person who lived there was murdered. I'm not joking.
That's not.
And that thing has been on the market for months, and nobody. I mean, like, okay, I don't know, maybe a little.
I believe they do have to disclose that someone was murdered.
Well, they disclose when you call. Okay, here's another interesting one. All, all cash home purchases, they
Uh-huh.
are the lowest in decades. In
Wait,
2024,
you said the lowest in decades?
yes. So all cash purchases are declining. That means
Yeah, you know why?
paying loans. Oh God, I'm scared. Go ahead.
It's all that credit card debt.
That's maybe, maybe. So, okay, this source said in 2024, it was 32.6% of home purchases were all cash, down from 35.1% in 2023. Pre-pandemic, it was 25 to 30% of the market. I just thought that was interesting. And I've seen slightly different numbers over the, like as far as what percentage of the market it is. But it's not an insignificant number, but it is decreasing a little bit.
Actually, I have a better reason why it's down.
Boy, here we go.
Because loan officers have gotten smart and talked people into doing bridge loans instead of waiting to sell their house and then buy the new house with cash.
Yep. Okay. So one thing that we did not talk about last week when we had Steve Edgerton on, who was talking about all sorts of things from tenants and landlord tenants and ADUs. And he's done a lot of flips in his day. He had told me that his first deal was 7 points, 12% interest, and 65% LTV. So next time your clients are telling you that pardon me, private money is too expensive, remind them of how it used to be, because it used to be really hard. Okay, I thought this was interesting. I-10 loans. I had one lender tell me that their I-10 loan applications are up 35% since December 1st, which I thought was unbelievable considering the environment we're in. So how about that?
That is amazing.
That's what I
I,
thought. I mean, if I were an investor, I said, okay, so what about when, I
well, but an
not
I-10 loan can also, am I correct? You can do an I-10 loan if you live in another country and you want to buy an investment property here. You could do it with an I-10 loan.
you can do it. I mean, that's a visa thing. So isn't it? Am I
Um,
wrong?
maybe I'm mistaken that one.
Probably. It's probably you, not me.
Yeah.
Okay.
Yeah,
So
I can't understand why they'd be up. Maybe I'm totally missing something.
I am totally missing something. So any insight from
But
everyone?
maybe that's a message, and maybe I should look into marketing that better.
Yes. Oh, I'm sorry. I'm just thinking you're so
We got a message from yeah, it's got a whole bunch of people from England are using I-10 loans. So yeah, maybe there is something to my theory.
Hey, that doesn't mean that people from England can't be illegal, right? I guess they have visas.
Um, no, they owned this country at one point, so I don't think they can be illegal. They owned it before we did.
Are you kidding me? Good Lord. Oh my God. Yeah, okay. So
Oh, by the way, did you see that Denmark is
okay,
going
Peter's
to
pointing out, okay, we could both be wrong. Peter's pointing out, isn't foreign national different from my team? Yes, it is. And there
yeah.
you go. All right. Okay, this is something I've been dying to talk about for a while, and I never managed to get it into a conversation with someone else. But one of my big gripes has been the amount of money that Fannie Mae and Freddie Mac are making, and they just released their earnings. So, number one, remember when we only sent loans to Fannie and Freddie was like the redheaded stepchild, and
Mhm.
they had a much smaller market share? That is definitely changing. So, they, let's see, that their market share is up, I think it's saying 12% from last year. So with that being said, check out Freddie, because there are some differences in the guidelines. So
Mhm.
sometimes, like I just had one, as a matter of fact. So I had a cash out refinance, and they had done they did a bridge loan to buy the place. And then when they sold the property that they had used as the bridge, they took those proceeds plus money from an investment account that they were able to get at a really low rate for a few months. It was just a short-term thing. And they paid off the bridge loan, right? So now they had but part of it they did with an equity line. So they had an equity line, and then this thing from the bottom line is it wasn't purchase money anymore according to the GSEs. So Fannie Mae does not allow you to do a cash out refinance that isn't seasoned for a year. And Fannie considers the HELOC as cash out, and they're they both say it's cash out. But anyway, bottom line, they won't allow you to pay off a first HELOC. That's part of a cash out refinance. God, I feel like I'm mixing this up. Anyway, my deal was, they were paying
Check.
off non-purchase money, but part of it was a HELOC. Fannie wouldn't allow it, Freddie did. Able to do the loan. Okay, I hope that didn't confuse us.
In other words, check the
Cracking out
one
of
versus
people.
the other, which I always do whenever I get hey, I'm not gonna DU, let's go LP and see what happens.
Right, right. But again, I think more than ever because there, there are some very important guidelines, and this is where a really good rep comes in really handy, because they're able to say, hey, by the way, this
Good processor helps on that too.
right. Well, in this case, it was the rep who was able to identify that. Okay, so let's talk about earnings, shall we? Just for a minute. Let's just take a little trade past through the past 2 years and think about all the money you've made, right? Record breaking. You are rolling in money if you're an LO in the last 2 years, right? Or any mortgage company. Everyone's just killing it, right? Oh, wait. No. Oh, Fannie Mae. Let's see. How much did they make in 2024? 17 billion in net income.
So they're rolling in it.
Billion. Freddie, I mean, again, the redheaded stepchild. And by the way, if you are a redheaded stepchild, I do not mean to hurt your feelings in any way. I call Kevin translucent all the time, and he hardly cries at all anymore. So anyway, Freddie Mac reported full net income of 11.9 billion, which is up 13% from the prior year. And Fannie attributes their strong earnings to a strong guarantee fee revenue stream. So I don't understand. Like, if I were at the trade organizations, I would be jumping up and down, and they do it, but they do it so quietly. Like, I've heard them talk about this, but they don't want to offend anyone. And I'm like, okay, somebody needs to be throwing a temper tantrum over this, because this is the borrowers who are funding these huge profits, which I don't love it. Am I alone in this?
Yeah, I think you're alone. Actually, I think there's a great opportunity for us to throw out who out there would have some great ideas for our future guests.
Oh, okay, that is a great idea. And while they're coming up with great ideas, I'm going to talk about delinquencies, because they are up. So this is according to ICE for February. It was their February report, but it was at the beginning of the month. So they said that there was a clear shift in delinquencies. So they're definitely headed up. They were
Delinquencies or delinquents?
what?
Delinquencies or delinquents?
Oh, good point. Delinquencies. Okay, so delinquencies were down for December, but up 14% year over year. That's not insignificant. The GSEs, they're showing modest increases, but they're still lower than pre-pandemic. So Fannie, Freddie, still very strong and still really, really low delinquencies. The problems that we're seeing are with, surprise, FHA and VA. So they are up 0.75% from last year and 2.5% from 5 years ago. So
Okay, wait, say that again. Who is up? FHA and VA are up?
FHA. You've heard of them, right? You did one.
Yeah, no, I have, but I'm surprised the
comparison,
VA
correct?
ones are up also.
Right? Okay, so I wish I had this. Oh, hang on, I got it right here. It was really funny the other day, because remember there was a VA foreclosure moratorium. So I'm like, God, isn't that up? Is that up? I think it's over, right? So I go to AI and I said, is the VA foreclosure moratorium still in place? And it says no. And this was what, 3 days ago, I don't know, last week sometime. So clearly, soundly in February 2025. So no, the VA foreclosure moratorium has not been lifted, and it will end on December 31st, 2024. I'm like, okay, so wait, it's not lifted, but it ended 2 months ago or a month and a half ago? Okay, got it. Thanks for being clear. So again, this was part of
That's because the CFPB hasn't updated their website.
because they were shut down. Is that it? Oh my God. I just thought that was really interesting.
By the way, I haven't seen one reply to my ideas for future guests for our show.
Okay, so I used to ask, when we started doing this show almost 5 years ago, I used to ask all the time for ideas. I used to tell people, because we wanted to deliver what they wanted to hear. And so I asked almost every time, who would you like to see? And nobody ever answered. And so I stopped asking, and I hadn't asked in probably 4.5 years. And now we tried it again. And guess what?
Nothing.
Click.
So we got Elon Musk, though. We got him coming up.
Oh yeah, somebody did say Elon Musk. Yeah, we'll see
Yeah.
how that goes. Um, that would be interesting, wouldn't it?
No.
Someone said, "Are you going to get Elizabeth Warren on?" And I said, "How shall I put this nicely? Because I'm still trying to behave myself." It was a hard no, no, never, no, thank you, never going to happen. No, 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 no. Because for me, Elizabeth Warren is Richard Cordray and the original CFPB, which is we're the enemy. They had to protect the consumer from us. And so anyway, I can't even think about her without thinking about that. Okay.
But you did have a nice meeting with Nancy Pelosi, so you can
But
be
she was
nice.
not an animal about like thinking we were Satan.
Yeah.
Remember? It was not
Yeah.
her. God. Anyway, so there you go. Okay, so delinquencies, they are the highest in the South, lowest in the West.
Highest in the South, lowest in the West.
Correct.
So what about the North?
I'm just telling you where the highest and the lowest are. I'm not telling you where the median is, okay?
Wait, how did the West pass up the North? Because the North were always like those.
Nobody said the North or West passed up anything, okay?
You just said the West was the best.
Okay, I said nothing of the sort. Okay, I just would like to also talk about just for a second the fact, and if you are out of state, then just bear with me for a second. California Fair Plan is the second larger insurer in the affected areas in the LA wildfires. So
Just keep your pants on there, because when anyone in California has got insurance, expect a 35% increase in premium rates next coming year to make up for these losses in LA.
listen, we're almost at the end. We don't want to end on a low note. That is
Yeah.
so annoying.
That's a high note, 35% increase.
Oh, and by the way, okay, this will be a little Easter egg. We'll see what happens with this, but I put a friend request in on LinkedIn or something, whatever you call it on LinkedIn, a connection request a while ago. And for somebody who would be amazing to have on the show, and they accepted my friend request today. Or my connection request. So stand by, maybe that'll turn into something good.
Well, you sent a friend request to Donald Trump?
Please. Okay, someone's asking for us to share a wholesale lender recommendation for reverse mortgages. And they said they are looking at SunWest. I had a reverse mortgage that ended up not happening, and I took it to Plaza because our rep is just freaking tastic, and they're
I was going to recommend.
great. And yeah, so anyway, so I don't know if that helps at all, but also of note, FHA, you know how they're cutting federal workers like crazy. So FHA had been told that they weren't going to have any federal workers cut, but that did not come to pass. And they got rid of all the probationary workers who were working on a bunch of special projects, etc. And they are talking about how there are going to be delays at FHA going forward because they may be understaffed. So we'll see how that all rolls out.
Well, how about the employees at the IRS? They're going to fire all these 80,000 auditors they just hired.
Is that what they said?
No, I'm making that up, but that's, I can pipe dream.
Okay. Again, thank God I'm here to okay, so what's happening with the IRS?
Oh, you looked it up.
No, but I actually read about this, an actual article, not just pulling it out of my ear or some other orifice. So what's happening is there are huge delays around everything. Like if you have a tax problem, a tax question, if you're trying to fix something on your stuff, you are toast. And I don't think it was good before. I think it's worse now. So with all that being said, we're done. God, that was an hour.
That was pretty good.
Holy guacamole. All right, kids, thank you so much for hanging in there. And
email us directly if you got someone you can introduce to us that would be a great guest.
yes, Audrey at mortgagepros411.com, s'il vous plaît. and have a wonderful week and go get some loans and close them. All right. Bye, guys.
Bye.